What if I were to tell you that the stock market always goes up? Leave me a comment right now with what you think about that statement. What's up, guys? I'm Mike. Welcome back to Everyday Money. And today we're going to talk about how the stock market always goes up over time no matter what. And when I say that, that's probably going to get a lot of people going like, well, what about all the downs that we've had? I mean, even just recently, we've had the real estate crash. We've had 9/11. We've had dot-com bubble. We've had coronavirus crash. We had a December crash not too long ago. And then if you look back farther in time, there was the Great Depression. There was Black Monday. There was so many crashes. How can you possibly say that the stock market always goes up? But then I put a chart on the screen like this, and it's very clear that the stock market is always going to go up. The difference is it doesn't necessarily go up every single day or week or even year. But over time, it always goes up. And it is almost the only thing that you can look at for investments that is almost guaranteed to make a return over a long period of time. Now, I did say that it was the market that always goes up and not individual stocks. Individual stocks, that's not the case. They do not always go up, and a lot of times they go down, and they go down so far that they go out of business, and then they're unlisted from any of the major markets, and they just cease to exist. Other times they do go up and up and up until they're some of the largest companies in the world. But for today's video, we're going to talk about how the stock market as a whole always goes up over time, and it has to continue to go up, or it won't even make any difference because it'll just get completely wiped out. So when we say that the market always goes up, you have to define what is the market or what is an index. And all it is a group of stocks or equities based on some sort of criteria. So if you just say that it has to be a stock, that would make up the entire market, all of the stocks. And the one thing that I use to invest in all of those stocks is Vanguard's VTSAX, and it allows me and possibly you to invest in every single listed equity in the U.S. market. And that would be an index right there, the U.S. stock market. There are other well-known groups of stocks that are put into indexes, such as the Dow Jones Industrial Index. A lot of times when people say that the market is doing whatever, they are speaking of the Dow Jones Industrial Index. Started off as a group of 12 stocks of the largest American companies. Now it's grown to the 30 largest American companies. Another well-known index is the S&P 500 index. That is the 500 largest companies in America. There are several other well-known indices that you can look at, and they'll get into tech stocks, and then you can get into index funds that just group things into either their sectors or how big or how small these companies are based on multiple different metrics. But when we talk about a market, we're just talking about a group of stocks and how they are performing and not any one individual stock. And that's going to be important to know why the market always goes up, whereas individual stocks don't necessarily have to do that. So why do these markets always go up? For one, because they are self-cleansing. When companies do well, they can do well to, there's no limit to how well that they can do. They can grow by 100%. They can grow by 1,000%, 10,000%. Whereas if a company loses 100% of its value, that is the most that it can lose, and then it is out of business. Now, when you look at these markets and these indices, there might be 10, 20, 3,000 stocks in these things, and there'll obviously be a traditional bell curve, where over here on this side of the bell curve, the companies are doing very poorly. As you get here to the middle, these are your just average companies. This is what the average is doing. These are probably doing well, but they're not growing at ridiculous paces. And then when you get over here, you get to the companies that are growing at tremendous paces, and they are doing very well. Their price is doing well, and they're adding a lot of value to the market. You could be talking about people's lives, efficiency, or you could be talking about adding value to literally the stock market. As these two ends here fight it out. A lot of these companies are going to go out of business, these ones that are doing poorly, and they will be taken off of the market, so to speak. But these ones over here will continue to do well for the most part. And then they might move, once they do their ridiculous growth, and they move into this middle phase over here, or this middle part of the bell curve, and they just continue to do well and continue to add value at a reasonable pace. So if these companies are coming on the market and they're, returning or growing at, 100% or 10,000% or 1,000%, but these ones can only lose 100% of their value and then they're gone. This percentage will outweigh this percentage, and it will continue to cleanse that market of these non-performing companies in these, excellent startups, in these companies that innovate, and will continue to make the market go up as these ones fall off, lose 100% of their value, but these ones come on and are gaining 1,000% of their value. And then these ones in the middle here are just continuing to churn out value. So the market will always self-cleanse itself. In addition, the market will always go up because the stocks that make up these markets are not just some, ticker on a screen. They're not just this abstract where it just does whatever. A stock represents an ownership position in a physical company, a real company with real people. And they are competing in just an unforgiving business environment where they have to beat the other guy, at least some of the time, or they have to provide more value than the other guy does. They might make a product that costs the same, but does whatever it does much better than the competitor does. Or they might make a product that is of the same quality as the competitor, or even lesser quality of the competitor, but at a much lower price. In addition, this competition just encourages innovation constantly. And you can see this in things such as, televisions, where we have gone in the last, 15 years from color tube televisions, that a big TV was like a 32-inch tube television, and that might cost, I don't even remember what it cost, $1,000, whatever, to now you can go get a 75-inch ultra high definition TV that weighs like 20 pounds and hangs flat on your wall for like $450. That's the type of innovation that happens with competition. And those companies that make these things have grown in value because they provide a ton of value back to the consumer. Your Apples, your Samsungs, and all the others, the LGs that make phones for people, in addition to just everything else that you buy. Some of the things these days may be made less durable than they used to be, but for the most part, everything is technologically better. They're more efficient, just better in almost every way. That value that those companies are giving to people in exchange for money raises their dollar amount value, which raises the markets altogether. And if companies can't innovate and they can't hang with these companies, they can't provide that value to people, to the market, they end up going away. But it's completely offset and made even larger by the increased value that these companies that are able to innovate, are able to compete, add to the market, and then just continue to grow the market over time. I have to thank the J.L. Collins Stock Series for inspiring me to make this video. Google that and take a read if you're thinking about investing in stocks and you're just not sure and you feel unsure. That was the thing that I read that really turned the corner for me from feeling like stocks are a risky thing to invest into, they are a risky thing not to invest in, and are almost a sure return. So check that out because it's a really interesting read. It's an easy read. It's fun. It'll really help you out in the long run. Guys, if you like this video, if you like financial stuff like this, be sure to subscribe to this channel, grow your wealth, increase your success, put you on the road to financial freedom. Be sure to like this video for me. It really helps it out in the YouTube algorithm and brings you more financial stuff in your YouTube feed. I appreciate you guys watching today, and I'll see you next time.